So I've been getting this question from a few of my followers. Matthew, what is the ex-dividend date, and do I got to hold the stock? How long do I hold the stock in order to get the dividend? If I sell it, do I lose the dividend? Let me explain it really quick in this video to show you what an ex-dividend date is, how you collect the dividend on the stock, and when you can actually sell the stock and still be afforded to keep the dividend. All right, so let's use Starbucks as an example for ex-dividend dates. All right, so for the timing of this recording, which today is November the 8th, if you were to buy Starbucks stock right now at its current trading price of $104.46, the ex-dividend date on this stock as of right now, if you see below me, it's actually tomorrow, 11/09, November the 9th, and it will pay out a dividend or a cash amount per share. So again, if you own those shares at $104.46 for each share, you will receive a dividend amount per share of 57 cents. So if you take that 57 cents dividend, there should be 4 quarterly dividends that comes out to a dividend annualized return for Starbucks stock roughly at its current basis of $104 at just over 2%, 2.19% to be exact. So the question remains, well, do I got to hold it for 2 weeks, a month, a full quarter to get the dividend? Actually, no. You just need to hold the dividend on today by the close of the bell, 4 o'clock East Coast time. As long as you're holding the stock and holding shares before the closing bell today, you will receive the dividend. Again, the Monthly Fool, Investopedia, a few others will explain it pretty well. But as long as you hold the stock, again, before the ex-dividend date, which will be Thursday the 9th. So by holding the stock before the close of today's trading, the 8th, however many shares you'll get 57 cents. But just remember, you'll probably be like, well, that's too good. Why don't I just buy it right before ex-dividend date and collect the dividend and jump out? Well, there is a catch. So for example, if Starbucks was going to close today, let's say at $104.50, you have to remember, tomorrow's ex-dividend date, the stock is going to adjust that payout of dividends to its shareholders. So when you wake up, even though the stock, say it closes at $104.50, it's going to open up based on the percentage it's paid out. So if it's 1/4%, you could open it up and it would be like $103 and change. I'm not going to do the exact math, but just because you got the dividend doesn't mean you can just jump out the very next day and take the dividend and run. It doesn't quite work that way. So there are people out there, or investors called dividend scalpers. They'll go in there and they'll scalp the dividend. And a lot of times they'll sell a covered call to collect premium because they know the stock is going to go down. But a lot of times the premium on the call that they're writing to cover doesn't pay out the full amount if it was in a traditional non-ex-dividend time. So just remember that. All you have to do, in short, is you just got to hold this stock before ex-dividend date, which would be today, because ex-dividend will be tomorrow, Thursday the 9th. As long as you hold it within 3 minutes, 2 minutes, whatever, just get in before the close of bell, you will receive that dividend. So that's how ex-dividend works. I hope you got value out of this video. If you have any more questions about stock investing, ex-dividend dates, things like that, feel free to jump in the comments, let me know. As always, happy trading, and I wish you guys the very best.